What if the biggest housing story in British Columbia right now is not a housing crash at all, but the setup of the next housing shortage? Because that is what I think a lot of people are missing right now. It is easy to look at stalled pre-sales, weak condo demand, unsold inventory, and falling construction confidence, and to say, good, the market is finally cooling. But that is only half the story. The other half is this: when pre-sale collapses, projects do not get financed. When projects do not get financed, housing starts fall. And when housing starts fall for long enough, today's slowdown becomes tomorrow's shortage. And that is exactly why the BC government may be forced to respond, not because they want to rescue speculative condo investors, but because they may not be able to ignore the economic damage and the future supply crunch that is now building under the surface. Hi everyone, welcome back to the channel. Today I want to break down in practical and educational way what the BC government's options actually are if this housing slowdown gets worse. I want to cover three things. First, how this slowdown is different. Secondly, what policy tools BC realistically has. And third, when those tools can actually show up. Because a lot of people are asking the wrong questions. The question is not, will BC bail out developers tomorrow? The better question is, at what point does this slowdown become painful enough economically, politically, that the government has to step in? And when you look at the data, I think that window is opening now. Let's start with the core problem. Metro Vancouver saw just 5,822 new multifamily home transactions in 2025. That was the lowest level going back at least till 2012. That matters because pre-sales are not just marketing events. In this market, they are often the financing engine. If the pre-sale threshold is not met, lenders pull back. Projects get delayed. Some get cancelled altogether. And that is why this matters so much. Metro Vancouver housing starts have already moved lower for two straight years after the 2023 peak. In 2023, we saw 33,244 starts. In 2024, that dropped to 28,112. 2025, it further dropped to 27,185. So yes, there is pressure right now in parts on the condo market, but the pipeline behind that market is already weakening. And that is the part most people are not talking about. What looks like too much supply today can become too little supply tomorrow if construction gets choked off. So now let's talk about what BC is already signaling. The first thing to understand is that BC's current posture does not look like writing blank checks to rescue presale projects. The signal so far points towards reducing costs, improving project viabilities, and exploring models that shift housing towards rental. The clearest move came early this month. The province announced changes that would allow more flexibility to reduce or waiver development cost charges for most type of housing. This is a very important signal because reducing upfront costs is one of the fastest ways to help projects move forward. There is another reason this matters. Ottawa has tied some housing related funding to lower development fees and charges. So BC is not just acting on its own reason, it is also trying to position itself to unlock federal money connected with housing delivery. That tells me the first line of action is already visible. Reduce friction, lower upfront charges, and try to keep projects moving. The second signal is political. Premier David Eby has already shown more openness to investor capital in housing that many people expected. That does not mean a direct condo bailout, but it does suggest there is room for some type of model where private capital is directed towards purpose built rental or income producing housing instead of speculative flipping. So, if this market gets worse, what are BC's realistic options? Option number one is to expand fee relief more aggressively. This is probably the fastest and easiest tool because the province has already started down this road. If BC wants projects to move, one of the quickest ways is to reduce the upfront cost stack. That could mean broader DCC reductions, more targeted waivers for rentals and affordable projects, or temporary relief for projects that are ready but no longer make financial sense under today's cost structure. Option number two is to create a BC version of Ontario model. Ontario has now backed a public-private fund to convert unsold condo inventory into long-term rental housing. Now, does BC copy that exactly? Not necessarily. But could BC create its own version using BC housing, BC builds, pension capital, credit enhancement, or some public private structure to absorb blocks of unsold units and turn them into rentals? Yes, absolutely. And politically, it is much easier to sell than a direct bailout of speculative condo projects. So the question is, why should BC follow Ontario's footsteps? Well, in Ontario, the shadow inventory stood at 4,000 units, whereas BC currently has 5,000 units in shadow inventory that includes Vancouver and the Surrey region. When we talk about population, Ontario has 2.5 times the population of BC. So, in theory, we are in deeper crisis than Ontario is. Now, let's get on to option number three. Option number three is targeted bridge financing or equity support for viable projects. This would be much more selective. Instead of supporting everything and everyone, the province could support only projects that meet certain conditions: strong location, real housing need, construction ready status, and ideally some rental or affordability component. That could look like low cost loans, loan guarantees, mezzanine financing, or direct equity participation. The point would not be to save every developer, the point would be to prevent the total collapse of the housing pipeline in places where the province knows that the supply will be needed later. Option number four may actually be the smartest one. Use the slowdown to build non market housing and workforce housing. In simple terms, if private condo projects are stalled, government can use the same moment to keep crews working on non market housing and affordable housing and purpose built rentals that could help protect jobs while also preserving future housing supplies. So now the big question is, what is the timeline? So here is my read. Phase 1 has already started. This is the policy window that we are in. Expect BC to focus first on cost relief, development charge flexibility, and alignment with federal programs. This is the fastest and most politically manageable move. Phase 2 is in the summer to fall of 2026. This is when pressure could really build. If more projects stall, more starts are deferred, and job weakness becomes more visible, the political pressure will rise. And at that point, the conversation changes. It stops being should the government intervene and it becomes how could we stop a much deeper construction slump. Phase 3 would be early 2027. This is when more Ontario style interventions become plausible. Not guaranteed, but plausible. If you start seeing more high profile receiverships, more contractors laying off crew, and more evidence of future supply being choked off, BC could move towards a rental conversion fund, selective financing support, or a large expansion of BC builds style programs for stalled but still viable projects. And then comes the fourth phase between 2028 to 2030. This is where the real risk shows up because the units that did not get financing today are the units that do not get delivered 2 to 3 years or even 4 years from now. That is why I keep saying this is not just a condo story, this is a pipeline story. If too many projects die in 2026, 2027, which is expected to, the shortage risk comes back later. And when it comes back, affordability usually does not improve. It gets worse again, just in a different form. So here is the bottom line. I do not think the BC government's most likely first move would be direct pre-sale rescue. I think the first move is already underway. That is lowering charges, improve project viability, and unlock federal money first. And then try and keep the rental and affordable projects moving. If that is not enough, the next step probably is not to save the condo market. It is most likely to convert unsold inventory to rental, support only viable projects, and use private and public capital to prevent a much bigger supply hole later on. That is the key takeaway. What looks like excess supply today may actually be a warning sign for the future undersupply. Because when pre-sales collapse, starts eventually collapse. And when starts collapse for a long enough time, affordability usually does not improve. It gets worse later. That is how I see the situation right now. The real question is not whether BC can do something. The real question is whether they will act early while they still have options, or whether they will wait until the slowdown becomes much bigger economic and housing problem. Let me know in the comments, do you think BC should intervene now, or should the market be left alone to reset on its own? And of course, follow me for more real estate insights and updates. And if you have liked this video, hit the subscribe button and the bell icon. If you want to talk about real estate in the Fraser Valley, there's a link in my description below to book a one-on-one call with me. Until the next video, have a good day.